series of podcasts brought to you by Insurindex. From our London studio, we're going to be exploring the nature of branding in the London specialty market. Why is it important? What does it mean? We'll be talking to C-suite leaders of insurance companies to dig into their branding strategies and to understand what they're doing and why. But we need to go back to the beginning and ask ourselves, why does brand matter, and what does it mean in the London market? And to answer that question, I'm joined by two esteemed gentlemen, Ben Bolton, the Managing Director of Gracechurch, the data research consultancy, and Julian Steedman, the Chairman and Managing Director of the Brandex Group, the leading digital marketing agency in the London market. Ben, maybe I can start with you. What does brand mean in this market?
About the mid-2000s, to keep the story very short, I think certain businesses realised that actually by branding, marketing their businesses, they could create goodwill that was actually on, an intangible asset, as it were, for their business. And one of the first people to do that, I think, was Stephen Catlin.
Was that prior to the merger and activities that went ahead with that?
Well, that was really post them buying into Wellington. So I think prior to their merger with Wellington, it was a market. In fact, back in the day when we measured it, Lloyd's would have had about 40 to 50% of the brand recognition at that time, as opposed to the individual, syndicates in inverted commas. So we had a real transition, I think, from what were trading entities, and still are, of course, trading entities, into what you'd really say, of course, they're Lloyd's and they have all the terminology around them, but really insurance companies that stood for something more than just we pay claims and we write policies. And so I think, yes, Catlin was certainly one of the first to do that. And it created, I think, other advantages over time as they did it consistently, which we will touch on through this whole series, I think, is the power of branding as you build it over time, is that it starts to create a multiplier effect. You get more consideration, more shortlisting. You realise these opportunities are coming, at least in part or sometimes entirely, because you're known and you're kind of in the memory banks of the market. So but certainly for the London insurance market, I wouldn't say the same is true of personal lines or more global American businesses where we've had, historically brand was important, like Travellers and Chubb and so on. It has become much more important, and to bring it right up to the present time now, we've just done some research which would suggest that most of the marketing functions at the moment are, say at least, that they're focused on branding as opposed to just what you might call sales support. So they're building the reputation of their businesses. So they realise it's important to invest in that. So we've gone from kind of marketing being seen as a bit of a cost to drive some sales to marketing being seen much more as an investment for a longer term play in the market.
And you mentioned Stephen Catlin. Is that because some of these charismatic personalities have moved away from the market and it's now more conscious on the marketing department to create that brand?
Well, I think it's a maturing. I think that, if we look back at the London market, I think those personalities were Stephen and others, Charlie Phillips, who knew they were entrepreneurial really, and you'd say the same of Nick Furlong, Andrew Beasley. Yeah. They had more of a vision, and they wanted their businesses to be more than just the old-fashioned Lloyd's entities, and they were competing with one another. They all wanted to beat each other, so it was competition. So yes, it is those personalities because they drive the change. I think if you go to, if you read Stephen Catlin's book, which is Risk and Reward, it's a very good book, I'd certainly recommend it. He talks in there saying the most important thing they did was to establish the values of the business.
Yeah. Written
down on a piece of paper. And that was the bedrock really of them saying, we really stand for something in the world. So you're much more than just a company that underwrites some risks and hopefully makes some money, right?
Yeah. And Julian, has the creativity of brands changed over the past sort of 5-10 years?
I think rewinding from that question a little bit, I come back to what does brand mean in this market, and I think there's a few unique points to make that I think are often forgotten. One, it's very different in an intermediated market. to communicate, because you're communicating not only to your client, if your client's your broker, but you're communicating these days to your client's client. So suddenly, if you look at creativity in the London market 15 or 20 years ago, brand mattered so much less because what they were trying to achieve was very different. Now suddenly you've got lots of global brands who are performing on a world stage. They might sponsor the Formula One or the rugby. They've got very prominent brands. Suddenly you've got some large specialty brands in the London market suddenly need to compete with what those large global brands are doing. So when you pull all of those challenges together, I suppose, what are they trying to achieve and what they now need to try to achieve for the future? But I come back to the fundamental question: what are the components that make up a brand in this market?
Yeah, I mean, I think Julian makes a really good point, and it reminds me that one of the great debates back in the day was whether Lloyd's would, for example, would market directly to clients, to risk managers, and they decided not to. They decided that they would really kind of constrain the marketing to the intermediaries, to the brokers. So I think that has historically been where the market is. But I mean, I don't know what Julian thinks, but I think that is changing. I think there is a kind of dual aim now, in a way, and sometimes that makes it a bit fudgy because there are different. You have to do it differently, right, with brokers versus clients. Where you are marketing your brand both to be, for example, really well known in the boardroom, if you're pitching in very substantial programs of risk transfer, versus trying to be known to the placing brokers in London who bring the risks from all around the world. So that, I think, is still being worked through, but I mean, I feel that it is now much more about the global piece in particular, that you realize that you can't have people, you just walk over the street and meet the broker and do the deal. It's and COVID obviously changed this as well, which is that your brand's got to be working in all sorts of different places in the world.
So sponsorship of, you mentioned sports, of the rugby is more about global recognition rather than necessarily getting top of mind with brokers.
I think it functions on both levels, and it is clearly at a strategic brand level. They're not advertising product there, but it is certainly supporting that front of mind awareness, because if you follow sports and you think of some of the big brands that I won't mention, they're everywhere always. So suddenly, if you're more of a niche provider in the London market, you are going to compete against those brands for that piece of business. So that end client has got a decision to make, and what are they going to do? They're going to research the brand or the brands that are in that pitch, for example. I think the other interesting challenge is lots of new entrants, and we've touched on this, and I think it'd be interesting in this podcast series to listen to what some others think from the market, from some of the brands that we're talking about. But those small startup brands have no legacy. I wouldn't call it easy, but in some respects it's easy to start with a blank sheet of paper, no legacy technology, data first, because they're starting from scratch. There are lots of things that in some ways make it much easier for a smaller player. They tend to focus on niche lines but want to be top of those lines. But suddenly those guys have to compete with the largest of the London market carriers and the global players. So brand is becoming a hot topic, and that's what we're seeing every day of the week.
And over the past 5 years, we've seen these challenger carriers come in and take some of the big guns' breakfast and their market share. And do you think that'll continue?
I think it's an interesting time as the market softens.
Well, quite, yeah.
My view is that brand becomes, what are your points of differentiation? It's a challenging market. There are more and more players in the space with more and more capacity to do what they want to do. Surely brand is going to become a fundamental part of the decision making. And I think technology, and we could probably do a whole podcast series just on technology as brand, but what's happening with digital trading in the London market and the specialty market is going to change what brand is and how it has to function even more, because suddenly that face-to-face relationship potentially could be one step removed. So again, my thinking is that brand has to come all the way to the fore. So I would say in the 30 years that I worked in this industry, there's never been a more interesting time for brands, where finally, as Ben said, people are starting to consider brand as an investment rather than a cost. And in my experience, that's really started to come into focus only in the last 5 years, and I think pandemic had something to do with that as well. Suddenly, where people couldn't meet people in this market, which is a market built on face-to-face trading, suddenly people had to market differently, had to present brand differently. There's certainly something big and fundamentally is changing, and will continue to change, I think.
And Ben, do you think there's a correlation between the amount of money spent, a huge amount of money spent in the market on marketing, branding, with performance of these carriers?
Yes, it's difficult. That's the kind of holy grail of marketing is to prove the the ROI or the return on that investment. All the theory, the B2B theory, the research theory now that we are building into our research says that at a very simple level, if you build awareness in your category, in other words, the whole market you want to go for, you will get much greater consideration. I think we talk about our data showing that a broker who is spontaneously aware, like top of mind aware of you, is 7 times more likely to place that risk with you, right? So this is supposed to be a rational market where it's all thought through and it's done on, complex spreadsheets and all that. But reality is that people still do business with people. And when they do that, there is a part of the memory that is the business. So you go, well, it's Julian, but it's also a brand I know, and the two kind of work in concert. But that hasn't changed. It's not different in insurance than it is from other markets. It's the same basic principles of marketing. Julian's right, though, when he talks about the complexity looking forward, because the shifts and changes in a market like this, when it's intermediated, it's global, there are all sorts of players of different shapes and sizes. I could say 2 things. One is I think scale will in the end win out, because efficiency is massively important to insurance, and ultimately so is trust in a brand. And the global, I think those global players will win out. But I always think the second point is that there will be a constant churn of specialists, if you like, coming in, because the element of expertise in this market, in the commercial insurance market, even into SME stuff, is really still very important. And the computers don't quite get it yet. So that is, and we haven't even touched on things like climate change, evolving risks. We don't need to go into all of that, but this is going to be a market where you're going to need that intelligence and that kind of intellectual input. And so job roles are changing. I mean, it's very hard to look forward and to see what brands will look like. And that's the fun of it. It's true in all markets,
Yeah, it's interesting. And there's another sort of facet to that, which is the brands that use or the people within those businesses are advocates and ambassadors of those brands is another critical success factor. I think there's a lot of challenges with how internal teams talk about brand and the understanding of what is brand. And again, back to this podcast series, it would be really interesting to talk to a number of brands from the market and start to understand some of their thinking. But my view is, again, the brands that embrace their talent, and their talent is part of that brand, they become the brand ambassador. That's another critical success factor in this marketplace, I think.
And what we've really had is a sort of corporatization, going back to the first question you asked. There are very few of the startup businesses now that are like the old trading businesses. They are corporate from the beginning. They are subject to the regulatory elements of the market. They set up to have a kind of set of, actually, like Stephen Catlin did, to have a set of values, because they've got to attract talent. So they start with from a different place, I think, in terms of being much more grown up, I think, and much more like mature businesses.
And I think it's fair to say all of those class of 2020 brands that have emerged as startup brands have all been brand-led, in my opinion.
From the beginning.
Brand has been an important part of that mix from the beginning. So they haven't come in, clearly they're focused on trading, but the brand has been a part of the sort of success factors of it, however niche the lines are. And I think you'll see more entrants as more emerging risks appear, and there's more money to be made out of some of those emerging risks.
Yeah, and I think C-suite, I think genuinely the C-suite now, even if they don't necessarily get involved in all of it or know all the intricacies of marketing or brand building, I think intuitively they feel it's really important to them because they know they've got to cut through somehow. And I think probably everybody roughly agrees that most of the stuff in the market, the products themselves are kind of quite similar. They're quite commoditized.
Yeah.
So what gives you difference or superiority against your competition? I think they intuitively know that you've got to market that and you've got to invest in it.
You've got to get the right talent.
Yes, and you have, and that talent has to represent you as well.
Yep.
So things like some of the scandals that we've had in the market and the Bloomberg expose, you could say, oh, well, they were all about culture. Yes, they were, but they were also about, kind of pushing out the renegade element of the market, because that's the old trading businesses. It's not IBM. That unfortunately is a bit more boring, but boring is where the money is.
But that is back to the corporatization pieces about what makes up brand. And in this market, it's service, it's claims, it's delivery, it's talent. You've got to package those things together, and they have to, as a brand function, be presented in a united way.
But it's not just creating those value propositions internally. It's actually amplifying out to the market, and
it's the storytelling. It's back to
yes.
frequency and recency of marketing. I mean, don't want to get too tactical about marketing in this particular point in the podcast series, but that's absolutely right, and we can see that in the data. Frequency and recency, front of mind awareness, all has a big impact on shortlisting and ultimately more business.
So do you think we've moved from dare I say the phrase brochures and brollies, but the brochures and brollies marketing teams that might have been around 5-10 years ago to teams that actually work closely with the C-suite, and there's an understanding by the C-suite that actually the marketing people should have budget to develop brands.
Yeah.
Is that a general trend that's moved?
Yeah. Certainly, I think in my role, that's those conversations are happening more and more. And within 30 years of doing what I've been doing, that is happening significantly more, and people are getting smarter, and people are realising, and certainly with the conversations we have, people are asking what other people are doing. People are very conscious now of who's doing what and how they're going to build their brand. There is a bit of a sort of brand arms race going on, I think.
Interesting.
Which is lifting the bar for everyone.
Yeah.
But for those, again, why it's going to be a really interesting next 5 years, I think, for budget and spend, because with more budget and more media spend and more above the line, you get more front of mind awareness. So is it going to come into almost a budget war of who's going to shout?
And I believe it will, because I think I've seen so many other markets where that's happened. I mean, for example, used to work in the management consulting market with businesses like Accenture and so on. What that became was, it wasn't all about the services and all that. It was really about them spending more, PwC spending more money than Accenture to get their brand to be known in the boardrooms of the biggest companies in the world. And that pattern, I think, will be repeated. It's the same thing. And again, if you take what's happening now, where we've had campaigns, actual advertising campaigns going on, there are more every time one of those goes, because of the question you asked me earlier on. Yes, it does measurably improve because they get more business and they say, well, that was worth it. That sets someone else off around the corner going, well, we better think about doing it, because otherwise we're going to lose out. And I think we have 65 companies in our research in London alone.
What's interesting though is
fighting for business.
3 of those I've seen in the tube station at Bank in the last 6 weeks.
Yes,
so that is visible. New and different.
I mean, it's like you move the conversation. The Lloyd's market is renowned, or has been renowned, for not necessarily being top of the mark in D&I and gender, maybe behind many of the other sectors. But there's a huge drive now to focus on inclusion, diversity.
Yeah.
Has that reflected in a change in the way the branding campaigns are made?
Yeah.
And undertaken?
The understanding of employee value proposition and employer brand as a whole is another thing I would say in the last 5 years is really come to the fore, and more so in the last 12 months, I would say. That agenda is, from a brand and marketing role point of view, is becoming more and more important, because there's a huge problem, as we know, and we've covered that in the research data, and everyone understands the issues, I think. But
I think history teaches you a lot in this market when you think about it. I mean, the old trading businesses were akin to gentlemen's clubs. coffee shop clubs or drinking clubs or whatever you call it. And they weren't doing DE&I then back in the day, I'm sure. But
the lamb is still popular.
Well, but you're right. But what I'm saying is that I think why do we have businesses embracing it? Well, one, because they've got values and things like that, and you can say all of that. But actually, what's happened is that mature businesses become more in tune with the social discourse and what people are saying in the world at large. Commercial insurance, and particularly Lloyd's, was a bubble. It lived, people knew nothing about it and still arguably don't know enough about it. So it was kind of, and people have said this, I come from where I live and I'm dealing with all these things in the modern world, and then I go into Lloyd's, this used to be the thing technology wise and so on. So there is a realization that commercial insurance is actually, to grow and to be successful and to thrive, it has to be much more aligned with what's happening in the world, and all these debates about climate and everything else are about insurance products, but they're also about saying, are we really in touch with what's happening? Are we really making the most of the opportunities that come because, US is investing massive amounts of money in green energy projects, for example, or whatever it is, but I think even 20 years ago, probably Julian and I have been in that market for that long. Those were never conversations that were going on. It was just, what risks did you write yesterday type stuff.
So you mentioned Stephen Catlin earlier in the podcast as being one of the sort of when things began to change with his mergers and acquisitions. Do you think as we go into soft market potentially and M&A becomes more of a topic that people might consider, the brands are going to really take, because obviously a good brand helps with that acquisition process?
Well, I mean, first of all, yes, a brand that is well known is highly valued and prized, so they should be able to get a higher price for it. And that's the goodwill element of it. As we move into the next phase of the market, what we've seen over the past few years is a kind of fragmentation of the market. Now, you could argue that was a bit of COVID. It was a bit of rate-driven, opportunistic type of stuff. The question will be which of those brands survives, whether they sell out or they stay as specialists or they grow. Who knows? The looking ahead though, and this is really a guess, but I think it's already started to happen. I think there will be more consolidation. Pie is not growing any bigger at the moment. I think the scale argument is that actually more global players can do more. They can grow faster. They can do bigger projects. The capacity they can provide for these changing risks is important. So we have some mergers happening, particularly in the UK GI market, which are pretty substantial. Interestingly, when these mergers start, we've had pretty big claims about that these businesses are going to win on service, which is arguably one of the strongest parts of, or is basically commensurate with brand. So they're saying we're going to beat you lot with our service and be superior to you, which is brilliant to see. Whether they can do it is anybody's guess, really. We'll measure it, by the way, but it's shows just how kind of bullish people are about this sort of thing when they go for it, and that hasn't been seen before. There've been financial deals, but now we've got something, some kind of secret sauce in our service or something that's going to be better. Now that's marketing, right? That's a battle of words. It's saying I can be better than you. It frightens your competition because they start to say, well, what do we do if he or she is saying we're going to be better at service? What are they going to do? Everybody's second guessing. So consolidation is also happening on the broking side as well. Hugely competitive on the broking side. We've seen brands building huge investments there on brand and to create consistency. And we'll come on to why that's important and simplification of brand.
And I think to finish that regional piece, again, the volume of London market specialty players strategically bleeding into the regions, and suddenly from a brand point of view, you've got another interesting challenge, which is lots of long-established household names, lots of above-the-line advertising on personal lines. Those brands are very well recognised, and they're global brands, most of them. And suddenly, again, lots of specialty brands leaking into that market. I think from a competitive brand point of view, there's another interesting set of things to watch and monitor and track.
Something else that happens, and we haven't didn't used to see it. I think it is starting to happen. Is what we marketing books called brand extension, which was always what we learned about brand, which is once you start thinking about what your brand is and what value it is to people, you say, well, what else could we do? How far can we push it? And you can see, FMCG companies have been brilliant at doing that. But I think insurers are starting to do that now, to say, where can we push out our brand and what else can we do to do this? Equally, you've got competitors coming in who say, well, we can get the capital, but we can do something a bit different. So MGAs, for example, have said, let's take one class of business and be fairly much monoline, but we will market and sell that in a different and service it in a different way. So this is everybody kind of playing around with the concept, the basic concept of we happen to be in insurance, but we can do all this other stuff that increases the value of what we've got. And those businesses can build very, very quickly into really valuable enterprises.
So in terms of, you mentioned MGAs, creating a successful MGA, and you've got a book on that, a podcast series on its own.
Yeah.
But creating a successful MGA, is the branding element and the marketing element a mandatory thing at the beginning of that? Or is that something that comes into when you've reached a certain level?
I think, we could do a series of 6 podcasts on that subject.
A quick highlight on it.
And it's really interesting because suddenly you've got delegated business that potentially starts in the London market. So you've got a brand providing capital to potentially a brand. So which brand are you selling? Depending on the claim situation with that MGA, I think a lot of MGAs, as Ben says, they're monoline focused principally focused on service. I think brand has got to be part of that question, particularly in this sort of wholesale retail market where, again, suddenly you've got more choice because you could buy from a large traditional London market carrier, or you could buy that as a broker. You could buy that from an MGA. So, of course, brand. But if you look at the MGAA membership list, how many MGAs are just in the UK? And I was at the program management conference in the US last year, and you look at the new distribution models and the scale of those US MGAs, they're insurance companies, and I talked to one or two of the big carriers about this, and this is a real credible threat to the insurance companies themselves. So coming back to brand I think is a fascinating moment in time where I think there has to be some consolidation, because how does this keep growing bigger and bigger and bigger?
Yeah, I agree. I think you can see there's lots of. What I was going to say was the stresses it's reflective of the stresses in the industry, which are around efficiency and cost, and how do you become more digital, I suppose, around large chunks of business like the program E&S business, which you can now move on computers across the vast, swathes of the US or Asia or wherever, because they are really relatively straightforward risks, but they need to be placed somewhere, and that is freeing up then businesses to be more innovative. Now that's kind of established incumbents, as we might describe it, but then others are coming in and saying, you know what, we've got a great idea around cyber where we can add services, because arguably insurance and cyber, they're kind of odd bedfellows, really, because they're not really, it's not as not to go into it now, but it's not an ideal insurance product because it's potentially systemic and all that. So, but people are saying, well, we play around with the idea. It's a brand extension. We're still in insurance, but we're offering you some services and things around that, and our knowledge and expertise about how to avoid having a cyber problem hack.
Yeah, true. If I pick on the consolidation bit again, and pick up some other themes we've covered, if we do consolidate and some of the bigger players do kind of fold in, like back to the days of Amlin and Mitsui Sumitomo and Excel Catlin, etc., gaining that market awareness, stretching to sponsorship of sport. Does it matter what sport? I know that Amlin went big guns on Formula E at the time, big guns, and others have done the similar. Does it matter what sport? What does that sponsorship, or is it just sponsorship?
If I put my marketing hat on, it comes back to what do you want to achieve.
Yep.
If you're going to sponsor the Formula One, principally that's very expensive sponsorship, and lots of eyeballs. It's global. It's back to, you watch Brokers, Howden,
Yeah.
Gallagher sponsoring rugby, and
The Lions.
the Lions, and there's insurance sponsoring women's football, which is a huge rising sport. I think this is back to, and it's almost where strategy becomes tactical, is what do you want to achieve and what's the impact on brand. I mean, obviously, famously, Aon on Manchester United football shirts, a global brand with a global brand, and the impact of that it's been enormous. But again, that's an expansive question, because I'll come back and say, what do you want to achieve? And the other interesting thing I think about this market is, particularly when you move away from the global players, is budget. And appetite to spend on above the line advertising has never been there in my experience.
But how tactical are some of these marketing initiatives, or are they based on strategic thinking and analysis that leads to a set of campaigns, or are they, I think we'll just do turn so tactically?
That's an interesting question, because I think, again, it depends. That varies so much from brand to brand.
You mean the chairman's wife chooses the sponsorship?
Yeah.
Yes. Still happens.
Yes,
I think.
Or changes at one dinner party. Yes.
My wry smile.
but that's okay. I mean, I have my view is that, I'm sure Julian agrees with this, is that sponsorship fundamentally is an above the line channel.
Yeah.
Right. So what's it's there to do? It's to raise awareness. Back to social discourse, you may say, well, actually, now we don't want to have, just the All Blacks male team. We want to have the All Blacks female team. We want to show that we're aligned with the social discourse for all the right reasons. And we may need to do something that's about sustainability. I think we are seeing, therefore, that for those very big businesses with those big budgets, they are always on, because they know that they don't want to let up, and they know the data. They can't let up on their brand, because they've got to keep on building. So, and they've got that competitive element where they've got to keep up with what their peers are spending. So, given that, what I think you are seeing in those businesses is changing campaigns, different types of choice of where you don't just have one, we don't just support one competition or Man United or whatever, we actually spread it across several different things. You're still getting the same effect of awareness building, but there's a subtle difference to it, which is it appeals to all
different
sorts
demographics.
of different segments within your categories. I mean, it's a kind of bit daft to call women a segment, but it's given it's kind of it's sort of ignored in some ways in the past. That you have to be intentional about it.
Yeah,
but I think it's really important to come back to those brands that have a composite part to their business, that has a retail part to their business. They have no choice, because it's so competitive. If you're writing retail home and car insurance, for example, there is one London market brand that outperforms everyone else for marketing effectiveness, simply because the rub-off from its retail above-the-line advertising campaign in the UK has such an influence on recency and frequency, memorability. They're all over, roadside, billboard. And so there's, again, back to interesting dynamics. Some of those have no choice but to do that.
Yeah.
And what will be interesting is those very large London market specialty carriers that aren't part of a global, don't have a retail trading business. How those brands have got to do something to counter.
So to the point about creativity, and Julian and I have talked about this quite a bit, and it's coming out in all the sort of general literature around the world about B2B in particular, which is this idea of brand assets, so memorable assets. So Geico in the US has a gecko, and it's now the most valuable brand asset in the world because it's so well known in the US particularly. But that was the early days of insurance, Travelers with this umbrella and so on. So these have been around for some time. So they sort of went away, and then now they're starting to come back. There's a brand in London. We're not going to talk about brands today as specifics, but there's one, which has used an early brand asset from when they started the business really successfully and cleverly. So these are creative ideas, little hooks really, that are giving you a clear identity in the mind of the buyer or the person who is proxy buyer for you.
B2B Institute proved, the LinkedIn B2B Institute proved that a creative approach to campaigning is more successful, that has more marketing effectiveness than a less creative campaign. And it's, as we all know, one of my big big subject matters.
Absolutely.
Be creative. Memorability is critical in this market, and it's proven that it works.
So this market is quite a strange market, quite a small market in terms of some of the C-suites of the old days and the new players that come in. The Insurindex brand indexes we put out, the employer brand index, not the market brand index, and the ranking of those carriers. How much effect do you think that has on the C-suite branding impetus to try and get from a 6 to a 1 or from a 32 to a 1?
More so than I think we ever imagined.
Yes. Yeah.
It's because it's simple. It's a simple concept. We're either at the top of that table or we're not. And
do you think that matters to the C-suite?
It does, absolutely. It's the one question that
and it should.
The chief exec, the chief exec in most instances now, we've had it so many times. The marketing head has come to us and said, chief exec's saying, fine that we got to number 6, but how do we get to number 3? So in a busy world, it's a simple idea and it's a simple measure, and it seems to be very compelling. And it's not only us that does this. This has been used a lot, but there is something about the ranking of brands that seems to matter a lot.
But these are based on the Gracechurch research data that's been put together.
Yeah.
So there's some factual, empirical evidence behind these rankings.
Absolutely, and it's based on awareness.
Yeah.
And share, basically the two. Your presence, your footprint in the market, if you like, and
your two
share.
Pretty key factors.
Yeah, it's around growth. I mean, in some ways, your earlier question about the link between investment and profitability is always difficult because there's so many other variables that relate to profitability and luck and judgment and market conditions, and particularly in insurance where you've got a cycle. But growth is more dependable. So in a sense, the businesses that we're really talking about now who invest in this want to grow. Yep. Now, either by taking share from others, which tends to be the case at the moment, or I think in future more and more saying, let's extend that brand and do something different and new where we make money in an area where others weren't making it. So we pioneer a bit.
And do you think that the people at the top of one index, will they be at the top of the other indexes as well, like employer brand and overall market brand, or is employer brand still?
I tell you what, I think brand building is a brilliant investment because it, as Julian said, it rubs off everywhere. You could be advertising in your personal lines business, but it gives you bang for buck in your complex commercial business.
But it does depend on the different elements of an organisation talking to each other and working with each other. So HR and marketing and the C-suite have all actually got to work together to get that.
At its very highest level, no, because if you're a large global business and you're doing brand advertising, that is about spontaneous front of mind awareness.
Yeah.
So even if some of those businesses are quite disparate and siloed, but that sort of halo advertising at the very top, we've seen it in the marketing effectiveness data, makes an enormous difference to what happens in the London market.
Yeah, and I agree that once you've got we're dealing with businesses at the moment where their brands are quite difficult to understand. They've got lots of subdivisions and different names, and it's complex. And they're starting to realise we can't hang our messages. They might be messages for our staff or our potential recruits or for our clients or our brokers. But we can't really hang messages unless this is simple to understand. And so simplicity is a really important part of branding and consistency. It's not about some complex creative. I mean, it is complicated to do actually, and to get right. Obviously, in particular, the creative side is, you have to have a lot of input to that. But a lot of it is about getting it right in the first place, and then sticking to your guns and keeping it consistent.
That's quite difficult.
In business, that is one of the most difficult things to do because everybody's got ideas about I'll do something new next year. Let's do another campaign. Let's get another sponsorship. Let's change the colour of the thing. I'll give you one very quick example from years back. When I started my career, I used to work with Lloyd's Bank, and one of the suggestions early on was, well, this horse thing, this black horse thing, do Do we really need to stick with that? Oh my God, the board was like, we are never ever losing the Black Horse. Should we be clear? The Black Horse is staying forever. And I look at it now and I say, good on you.
Yeah.
Lloyd's, they're not, I guess they're not being the most perfect business, and none of them is, but the consistency and the continuity that has given that brand, everybody knows it, right?
Yeah.
Brand
Gentlemen, I think we've hit the end of this session. Thank you very much indeed. Interesting as ever. Number of insights, number of thought-provoking ideas coming out. We'll continue to explore these thoughts and insights over the coming weeks with additional guests. And the next podcast will be with the co-founder of Mosaic, Mark Wheeler, and Rosemary Jones, Chief Communications Officer of Mosaic, where we look at their rise, as we mentioned earlier, the Challenger insurance rise in the class of 2020, and ask the question, how easy is it for these startups to eat the big guns breakfast? Thank you for listening, and goodbye.